Hi everyone, it's me Maria Staradup and you're watching a recap of the crypto market events from August 3rd to 9th. PayPal has announced the launch of its USD stablecoin. Another crypto exchange boosted a rise in the Shiba Inu token. After Binance approved this meme token and 7 other altcoins as collateral assets, the Shiba Inu coin jumped to 3-month highs. The saga with the rebranding of Twitter is not over. Elon Musk said that all the similarities between the new company name X with the existing crypto memes are not intentional. Meanwhile, a boom among financial companies for creating exchange-traded funds based on cryptocurrencies is gaining momentum. Judging by the number of requests for their registration, it looks like a new trend. For example, as of August 3rd, the US Securities and Exchange Commission has already received a total of 12 applications for the launch of exchange-traded funds based on Ether. Some analysts consider it risky and a verb for asset managers. After all, the US regulator has never given the green light to a futures fund based on Ether. A month earlier, a similar application for a spot Bitcoin ETF was submitted by the world's largest investment company, BlackRock. Last week, this asset management corporation was already under the scrutiny of the US Congress because of its possible ties with China. The Securities and Exchange Commission also undermined optimism in crypto markets. On August 7th, it returned applications to several companies for revision, citing unclear and unreliable data specified in the documents. Naturally, the market reaction was rather negative. The co-founder of the Gemini digital trading platform, Cameron Winklevoss, criticized the Securities and Exchange Commission's decision. He said that Gemini also submitted a similar request back in 2013. The Commission has not approved it for 10 years. The Securities and Exchange Commission decision also adversely affected Bitcoin. It dropped below the pivot level of $30,000. After a fall on July 23rd-24th, it slid to the narrow corridor of 28,730 - 29,790. However, on August 2nd and 8th, Bitcoin made an attempt to resume an upward movement despite a strong US dollar. It rose above $30,000 for a while. Both attempts were unsuccessful. The asset retreated after a short rally. At the end of the week, it tumbled to 29,460. Moreover, Bitcoin did not react to the publication of NFP data on August 4th. Bitcoin trading volumes also slipped to the lowest levels since the end of 2020. It seems that investors prefer sitting on the sidelines. They seem to avoid an orange pill. This is how the CEO of Galaxy Digital, Michael Novogratz, figuratively called Bitcoin in his interview with Bloomberg. He highlighted Larry Fink's orange pill moment, a term applying to a non-believer in Bitcoin. He got orange pilled, as we say. Larry was non-believer. Now he says, hey, this is going to be a global currency. People around the world all trust it. While the ranks of non-believers are slowly but surely narrowing, the US dollar remains the main fiat asset. A steady rally of the greenback limits the upside potential of Bitcoin. Given the latest events, crypto assets will hardly regain luster with investors. Last week, the US dollar fluctuated in the wide range of 101.7, 102.8. Interestingly, it benefited from Fitch's downgrade of the US long-term credit rating in 12 years. It also climbed as a safe haven currency. Speculators usually get rid of risk assets amid such events and buy more liquid assets like government bonds and the US dollar. Yesterday, the US dollar index consolidated near 102.5. However, today the sentiment may change after the release of inflation data. It may cause a surge in volatility, pushing Bitcoin to new lows. However, the situation is not as gloomy as it might seem. For instance, there was a rise in Bitcoin whales positions. Before the release of the US Consumer Price Index, Bitcoin trading volumes on all exchanges totaled a whopping $15 billion. This surge indicates a renewed demand from big investors. Another reason for the rise was the Fed's guidance to the country's banks for working with stablecoins and other digital assets. Ripple, on the contrary, decreased following this news. Over the last week, the token lost more than 12%. However, analysts believe that the XRP correction may be over soon. Lawyer Bill Morgan assumes that the summary judgment in Securities and Exchange Commission vs. Ripple will stand even if the Commission appeals it in the Second Circuit Court. Not all investors share his optimism. If after the court's decision Ripple jumped to 0.81 from 0.47, yesterday the asset ended somewhere in the middle of this range near 0.63. Ripple reached its high of $3.84 more than 6 years ago. The long-term court woes have battered the asset. Ether also showed bad weekly results. From August 3rd to 8th, it was trading in a narrow price corridor of 1,815–1,855. Only on Tuesday and Wednesday, the price resumed growth, trying to reach a high of 1,870. However, over the past week, the coin sank by 2.5%, trading near $1,850. Technical indicators are still pointing downward. Only a rise to 1,950 will signal a bullish reversal. Litecoin was affected by its halving, which would cut the bear block rewards to 6.25 Litecoin from 12.5. Traders fear that mining costs could exceed the rewards, so they have started selling off the asset. According to Into the Block, about 60,000 coins were sold in the last 5 days. As a result, after the third halving, which took place on August 2nd, the coin fluctuated in the range of $94–$84 on August 9th. Judging by on-chain metrics, a sell-off is likely to continue, so Litecoin is highly likely to slide below $75 in the coming days. In case of a rebound above $90, the bulls will regain control. However, 371,000 crypto trades that bought 2.62 million Litecoins at the highest price of $85 may decide to lock in profits. It will surely trigger another dramatic decline. That is all for now. We will appreciate your comments. They will help us create better content for you. Hit the subscribe button and keep close tabs on market developments. See you.